am going over Test 1 information so that students will be able to understand what it is they did wrong and get some feedback. So the first one I want to talk about is question 6. And the question was, paid $9,000 for equipment to be used in the business. I ended up throwing this question out because we didn't exactly go over this, and the majority of students did not understand this. But if you paid $9,000 for equipment, cash is going to go down because you paid $9,000, and then the equipment account went up. So technically you have cash going down and no revenue or expense, which would mean technically it would be a deferral. But the reason that I think a lot of students wouldn't have gotten that was because we haven't exactly talked about equipment being depreciated or becoming an expense at a later date. So I threw that one out. The next one was number 7, another fill in the blank. And this one says that you received a bill for $400 for telephone services on 12/31/2016. So when you're looking at your equation, you have received a bill for $400. So we didn't receive cash. We got a bill for what? Telephone use. So I know I must have some type of an expense, telephone expense, for $400. I haven't paid it yet, so accounts payable, $400. This is a situation where we have an accrual because it is not yet paid, so there's no cash, but we did have an expense. And we also are making this as of 12/31/2016. So if you see that this was an entry that's made the day that we're closing our books, the end of the year, then it also had to be an adjustment. I don't think that was as clear as it could have been, so I also gave everybody credit for that. The next one I want to talk about is accrued telephone expenses. This is question number 8. Accrued telephone expenses for $6,000. So if we look at this, the first thing I see is the word accrued. I know that accrued means that we have revenue or expense and no cash. And because it says accrued, I know that it's also an accrual transaction. So this says, indicate how it would be reflected in the statement of cash flows. If it's accrued, there's no effect on cash flow. So you have a P for $6,000, and again, telephone expense for $6,000. So there's no cash flow. But a lot of students said that it was cash flow, and again, that's just because a lot of them missed the fact that it says accrued. So we didn't actually pay cash. It was not an operating outflow. Question number 11, it said that Harborside prepaid $5,600 in rent. And the question is, did it affect cash or net income? So if we prepay, we're looking at assets, liabilities, and owner's equity again. If you're not using the T accounts or you're not using the equation, you will definitely have trouble doing any of your problems. So we have prepaid rent. So $5,600 had to go down in cash, and prepaid rent went up. So what was affected? My cash was affected. It went down. So it's one of these two. Was an expense affected? No. So it had to be A. A lot of students said it was B, said there was no transaction. So just be careful. This does not become an expense until it is used. So it will not become an expense until it is used. The next one I want to look at is number 12. this said that Harborside paid for supplies purchased on an earlier date. So you have to be careful about what the words are really saying. So if we look at this, if I'm paying for supplies that I purchased on an earlier date, what was this earlier date's transaction? So I must have had supplies going up for some amount and accounts payable because I hadn't yet paid. So in this case, now that I'm paying, you'll note that your cash is going to go down. Hold on one sec. Cash will go down and AP will go down. So now you don't owe it, you paid it. So again, when you made this payment, did cash get affected? Yes, it went down. Was net income affected? No. When is net income affected? When you use the supplies. Not when you buy them, not when you pay them, it's when you use them. On number 13, we had a question here that said, Harborside Inc. received a bill for BlackBerry services. They will pay the bill in September. So this is a very clear case where we have an accrual transaction. Again, phone expense. And AP. So in this situation, is there any cash? No. Is it net income? Yes. It's C, but a lot of people said NE for both, or no transaction. So just be careful on that. Number 18. This said that Raymond Company borrowed $8,000 on April 1st from the bank. The note carried a one-year term and a 7% annual interest rate. Raymond earned cash revenue of $850 in 2016 and $700 in 2017. Assume no other transactions. The amount of cash flow from operating activities that would appear on the 2017 statement of cash flows would be, and then you have answers here. So the first thing that you need to be able to do is figure out what your transactions are here. So on April 1st, 2016, this is 16, we borrowed money from a bank. I want to know what is the amount of cash flow from operating activities that would appear on the 2017 statement of cash flows. So we have to make sure that we know what was the actual cash. Well, in 2017, I had $700 of revenue that was cash, and I must have some expense. I have a note, and I need to record the actual interest expense on that note. It is a note that is a one-year term. So we have April through December 2016, which is 9 months. And then for 17, there must have been 3 months of interest. So if you take 8,000 times your interest rate times 3/12, you will get 8,000, I'm doing that right now, times 0.07 times 3 divided by 12 equals 140. So if we subtract 140 in our expense for interest from our revenue, what is our answer? This is what most students did. That's getting net income. So most students were saying that it was the 560. But the reality is it's saying, what is the amount of cash flow from operating activities? So what is the amount of cash flow from operating activities?